Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Friday. What's up, everybody? It's Friday morning. Hope everybody's having an absolutely amazing day. Welcome to the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hopefully, you guys all had a great trading day yesterday. No DMC yesterday as we do our live trading room at TradersArmy.com. But remember that the lines that we put on the charts, we leave them on the charts. I always say it's the good, the bad, and the ugly. And yesterday there was some good, yesterday there was some bad, and yesterday there was some ugly. So we'll take a look at all of them. So if you're new to the channel, do me a favor, click the subscribe button and hit the notification bell so you get the alerts as they come up. And if you're not new to the channel, do me a favor, leave a comment, leave a like, leave something down below so people know that humans are actually paying attention. So this morning we are up pretty big in the S&P. We're up about 14 points, and what we're up from is a breakout area that we had identified earlier in the week. So those of you that have been watching the DMC, we've been talking about this breakout area above 2,900, and we had that hit in the overnight sessions. Big move up above that level. Now, yesterday I had looked at a potential reversal point right in here at this little pivot area, and price. You know, we looked at that as an area where we may see a bit of a reversal, and price actually came and hit it once, and then we moved away to the opposing fair price value, base, and then popped down through it. So the level itself was okay, but not a phenomenal level, and your stop has to go below the next pivot anyway, which is below here. So that's one of those areas that you may or may not have taken that level, gotten stopped out, and if you did, very small, it was a very small risk. However, we've gotten a really nice rally up off of our breakout long. So if you took that breakout long, you're doing okay on it so far. Your stop should still be below the last pivot, which would be down in here. So take that stop. And I would say at this point, since we've rallied up and we're not getting a huge movement, take that stop, move it up to break even. It is heading into a Friday. So a couple things you can remember when we're heading into a Friday. If I want to hold it over the weekend, I can use it as a hedge, right? I can use options on futures as a hedge to hold something over a weekend and minimize any gap exposure. NASDAQ, we did not have the same setup in the NASDAQ. We actually had a little bit of a long off the 15-minute level, and once again, just like it did in the S&P, it went through there. But that's okay. I'll take a 6-point NASDAQ hit in exchange for a 6-point S&P, which is still running, right? 6-point NASDAQ, 6-point S&P. I'm going to get more bang for the buck on the S&P rallying higher on that than that small little NASDAQ. And this was one of the cases where we pulled back a little bit further than I anticipated for the reversal, but it didn't change my overall big picture bullish outlook. Next, looking at crude oil. Now, crude oil was our best trade of the day yesterday, as we had looked at crude, and crude came down into our reversal zone in the late morning and then rallied up pretty much all day, hitting our profit target. Now, price in crude rallied up all day, hit our profit target, and actually went through and is continuing to go higher. So if you're in the crude long, I think now is a great opportunity to take your stop and move it up underneath this area. This level itself, I'm going to convert that to a confirmation style entry. Once a level's been hit, I oftentimes convert it to a confirmation style entry. And then we look at this speed candle down here as a potential retracement zone, although I'm not going to add it at the moment. When I go look at this on a 4-hour, my 4-hour, we've got weakening momentum. We're sitting up at a resistance point on the 4-hour. A little bit of basing here. If we base in front of the level, then it turns into a potential for breakouts. Remember that when I'm looking at a breakout trade, I need to see that basing as an opportunity for something that I might want to get long and might want to take the breakout trade. Now, this also becomes an opportunity to take a look at a position over the weekend. And if you want to hold it over the weekend, remember that you can trade options on futures to act as a hedge. I know the biggest risk that a lot of people feel exists when they're trading futures is the gap risk, right? The gap risk over a weekend and holding those swing trades. Some of the best trades that I see people make are trades that they hold on to for longer term, right? It gets real sexy to look for, oh, I made $200 today or $300 today, but it's less sexy to hold on for $4,000 for 7 days, right? For some reason, we tend to forget about that fact, right? I mean, look at how over, in the last, I don't know, let's just use the first to the eighth. Crude oil went from 58 to 62, right? To 62.60. So in that period, actually the 8th, it went to 62.84. So that's about $4 worth of price movement. And if all you're doing is looking for those 10 cents every day, or a dollar every day, then you're missing out sometimes on the big runners. So a way to do that is to use options as a hedge. For those of you that are unfamiliar, if you go to the free trading videos section of tradersarmy.com, we actually did a video recently on options with futures. So combining options with futures. Ignore the host. But we did a video on how to combine options with futures. So if you're so inclined, feel free to grab and take a look at that one. That actually was a pretty good class that we did, but it might help you to understand options on futures. One real quick public service announcement. I'm doing the BP bike for multiple sclerosis, the MS 150, with my brother-in-law. He and I are gonna be biking from Houston to Austin. So my brother-in-law and I, it's the Traders Army and Empire Trading team. So if you guys are interested in joining, helping us get hit our goal, I'd love it if you would give us a small little donation, or at least pass it on to anybody that would. If you know anybody that would help do that, that would be amazing for the two of us. I'll put a link to this in the comment section below. It would really, really mean a lot for us if you could help us to get there. All right, back to the analysis. Let's go to gold. I just happen to have that one up, so I wanted to throw that in there. All right, gold. So looking at gold, I have some really nice levels down here that I identified as potentials for reversals, and I still like both of these levels. All right, I've got that 1307 by 1308, and then up above it is 1310 by 1311. So one of these is a confirmation, one of them is a limit entry, and we were looking at this yesterday. The market was here. Well, we traded down most of the day and traded down to our potential breakout area. Now, this breakout area was an area where we anticipated price could have movements, but there was something missing from this breakout. Okay, leave a comment down below if you know what was missing from this breakout trade. There was something missing from that breakout trade, and which makes it an invalid opportunity. There's a little bit of a quiz. Let's see if you know what was missing. Now we're starting to get a little bit of a rally up. If I were to identify a little bit of a trend channel on here, we will see that we're getting a bit of a rally up in a trend channel fashion, but we're also forming that shape. And when I say that shape, I'm talking about my favorite price shape. And my favorite price shape is a bear rally, bear rally, bear rally, or it's a bull pullback, bull pullback, bull pullback. So either the bear rally short or the bull pullback long is my favorite price. Well, what are we putting in at the moment? Well, at the moment we are putting in a potential for a bear rally, okay? And we're coming into an area that could work as a pretty decent level of supply. So as I look at this at the moment, it actually is in a potential reversal point now. When I look at it on the 4-hour chart, I don't see the area quite as clearly, and that's the only issue that I have with it. But I definitely have a more bearish stance. This would be an opportunity to go candle-to-candle style of trading for those of you that do candle-to-candle style off of the 4-hour chart on this trade. All right, let's go to bonds and currency markets. So looking at our bond markets, we had a level in the 10-year note that I've been looking at and looking at and looking at. And yesterday, we based below the level all day. And in the overnight hours, after the European market opened, we got a pretty big sell-off from that zone. So now that we've gotten a big sell-off from that zone, I need to add this as another potential reversal level. Definitely more bearish than I am bullish based on this movement, but I do believe that speed candles typically get retraced, and that's what we have here. The other side is this is created at the European market open, and those are some of my best times of the day to look for areas and opportunities. When levels are created is important, European market open being one of the most. So the next level that we will look at is in the Aussie. So let's talk about the Aussie. Remember I talked about the good, the bad, and the ugly? Here was the ugly. Had a good day overall. However, in the Aussie level, we'd had set up a potential reversal trade on a confirmation short. Well, the confirmation trades, remember, price has to come up to our level, trade out of our level before we take it. Well, this was a setup where we had the confirmation short and then a limit entry up above because we had both levels kind of stacked on top of one another. As I can see, the pivot and then this drop base drop. Now, I like this drop base drop, but price came into this level and it blew right through it, thus invalidating the level. Now, here's the problem is that we did then base before the next limit entry, which makes that level much weaker. Okay, unfortunately, it was a trade I had set up because I really believed in the level and price just blew right through it. And sometimes that happens, right? You're gonna get those areas where I kind of had done that one as already lower probability because we were in a fairly sideways price market, and so that was one. You talk about the good, the bad, and the ugly. That was the ugly. Was it ugly though? Not really, because I follow the rules, and it's okay to get stopped out when you follow the rules. What's not okay is to break the rules and still make a profit. I'd rather get stopped out when following the rules than break the rules and make a profit. A lot of people have a problem with that. I do not. Euro's continuing a little bit of a march higher. Feels like we're putting in a pretty solid base in the euro. If I look at this on a 4-hour chart, this is a really solid base that's taking time to form. And those solid bases that take time to form oftentimes lead to really nice moves higher. So I think that on the 4-hour chart, we're coming to some resistance up here, but in reality, that to me leads for a better opportunity on a pullback. So looking at a potential pullback for now, I am going to look at this area here for a potential rally if price does come back into this zone. Canadian dollar, once again, the good, the bad, and the ugly. The Canadian dollar price hit our limit entry and then hit our confirmation entry and then went through that area. This level did not work out because we had anticipated the potential reversal on this one and then a full reversal at the second one, and it just blew through both of them. And once again, you're going to get those, right? When the markets change directions on you, you're going to get those areas that get blown through. And so this is a good example of doing so. Now, took a small loss, but I'm okay. I'll take those small hits so long as I've got some winners to balance it out. Next levels were in the Great British Pound and the Japanese Yen. So in the Great British Pound, we're still in between our potential breakout area. Remember our rules on the breakout. Don't take the breakout unless all of the rules apply. And then our reversal up above. We've just been chopping sideways for a while, which makes the probability that much harder to really gauge. But we are definitely in some sort of a triangle pattern where we're anticipating some decent movement out of this, right? This is usually where you see some big movements. But if I look at the pound overall, we've really just been in a big 4-hour trend over a longer period of time. So last but certainly not least is what we have in the Japanese yen. So in the Japanese yen, price is continuing to fall. We've got a little bit of a supply level up here, up above us, and you're looking for a reversal as a chance to get back in. If I look at this on the 4-hour, huge sell-off, but we're coming to a gap fill area. Be aware of gap fill areas. Yes, I am aware that gap fill is on a contract rollover. I'm also aware that more often than I would like than most people would like to admit, those contract rollover gaps are still effective. So keep that area in mind. Remember, we're heading into the weekend, so as we head into the weekend, make sure that you are hedging any of the risk that you have, and futures options on futures help to do that and stave that risk off. So if you're in that long S&P trade, let it go, baby, let it go. This could be this could be a great way to send you into the weekend. If you're not, then keep watching the commentary. Hopefully you find some levels that work out for you. And there's some losses that were in there as well, and those are always going to happen, and we're going to take those, right? That's part of trading, is how do I handle the losses that are in there. And that's part of the reason why I leave the lines on the charts, is for us to be able to understand why the losses occur over time. And that's, go back and look. We do this video every day, so you can go back and track, okay, how did this level work? How did that level work over time, and take a look at what price tends to do. And that was, this is what I love about doing this as a YouTube channel, is it becomes a living anthology of levels, right? It becomes a living anthology of levels because it's the same instructor every day looking at the same levels, and that's one of the things people have told me that they like the most about it. So hope you guys have a great weekend. If you have any questions, email me, support@tradersarmy.com, and then also leave a comment down below if there's any educational topics you'd like to see covered. I'm thinking into my next webinar that I do. I did one a couple of months back on those future options on futures. Give me a comment down below in a topic you'd like to see a webinar on. Thanks so much, everybody, and I will see you on Monday morning. Peace out.